Hi everyone, let's go over my preferred and alternative macro and high time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my preferred macro bullish scenario where we're looking for a 5-wave move to the upside, where the most common target for wave 5 is between 98k and 174k. This wave 4 is then finished, bouncing right on top of the 0.5, which is a maximum target for a wave 4, taken from the low of wave 2 to the high of wave 3, and on the weekly, no candles closed below the 0.5, which is exactly then what you want to see. On the weekly time frame, the exact week low was also made right on top of the 0.618 fib time, taken from the low of 2 to the high of 3 as well. And we also had a volume peak at the lows, as you can see over here, which can signal a potential reversal area, just like it did with the low of wave 2 over here. You can see the volume during the drop, which is much higher than the volume we had during wave 1, but after that high volume move, we eventually had a big wave 3 towards the upside. If we then go to the bearish scenario, we currently have already a 5-wave scenario in. Now, this is an alternative for one big reason, which is this wave 4 over here. So in the bullish scenario, this being a wave 4 and then expecting a wave 5, this wave 4 is longer in time than this wave 2, which is what you want to see. That's most common as well, by far most common. But this wave 4 over here is shorter in time compared to this wave 2, which makes it, at the moment as it stands, an alternative scenario for me. In this scenario, we already have 5 waves finished, the all-time high being the high of wave 5, and we are now looking at a 3-wave corrective structure to the downside. I labeled it at the moment as an ABC, which then is a 5-3-5 move, where currently we are inside a wave B. Now in this wave B, looking at this move to the upside, we can expect an impulsive structure in a wave 1, or in this scenario a wave A. So we then have a wave A, 3-wave B to the downside, and then we expect a wave C to the upside, which is then a zigzag 5-3-5 move in a wave B, where we have a very big resistance above price at the moment between 40 and 50k. At 40k, it's because of the golden pocket over here taken from the high to the low, in line with the point of control of this volume profile over here. So that is some nice confluence at 40k. And at 50k, we have the 786 in line with the value area high of the range. So this area, that's why the white boxes here between 40 and 50k is very important resistance. Now, if price is going to reject in this area and move towards the downside in a potential wave C in this bearish scenario, then the most common target area for a wave C is between the 1 and the 1.236, which is taken from the all-time high to the low of 8 to then the expected high of wave B. And if we expect the high of wave B to be between the golden pocket and the 786, you will see that the most common target area for wave C will always be around the golden pocket over here, which is taken from the lows at about 3k to the all-time high. And it is in confluence with the value area high of this multi-year volume profile. So that is very big support, as we have the most common target area for wave C with the 1-to-1 and the 1.236 between 11.3k and 8k. We have the golden pocket over here, and we have the value area high. And the validation for this scenario is if price would move towards the downside right now and reach this highs. As it stands now, this doesn't really look like a 3-wave structure, so you like to see a more clearer structure and not hit this invalidation. But of course, after this area has been hit, or at least we see a 3-wave structure and then price moving down, this invalidation will be removed, and the invalidation is going to move from this low over here to the all-time high, as we then expect further downside in this scenario. If we then go to my first high time frame scenario on the daily time frame, this is my alternative scenario, where we then have a wave 1, 2, 1, 2, and then we expect a bigger 3 towards the upside. The main reason this is an alternative is because of the length of this blue wave 2, because the green count over here is a higher degree count. So in Elliott waves, you have different degrees, and the green count is then a wave 1, 2, and then inside this green wave 3, you have another 5-wave move, and then a 1, 2, 3, 4, 5, because each impulsive structure has an impulsive structure inside of it. So then you have a 5-wave move inside this wave 3, and therefore the blue count is a lower degree count than the green count. Now, usually if a degree or a count is a lower degree count, the waves are shorter in time. So wave 1 tends to be shorter than this wave 1 in time, and this wave 2 then tends to be shorter than this wave 2. And as you can see, this wave 2 was very, very short, by the way. It literally just got past the 0.382, which is taken fib time from the beginning of wave 1 to the high of wave 1. So this is an incredibly short wave 2 in time. And then this one is very, very long. This one is much longer over here than the wave 2 of a potential higher degree. So that that is the reason why for me this is still an alternative scenario. And if we then look at the retracement of this wave 2, now the most common target for a wave 2 is the 0.5 to the 0.786 pulled from the low to the high of wave 1. Now you can see we actually just missed out on hitting the 0.5 as the 0.5 is sitting at 24.7k, and we literally just missed it by a hair. Now we do have the 382 over here, which has been hit. However, the 382 is a rare target for a wave 2 and not a common target for a wave 2. A common target is again between the 0.5 and the 0.786. So preferably you want to see price at least hitting the 0.5 inside a wave 2. The invalidation for this scenario is if price is going to move below this low over here of the green wave 2, as it then invalidates a potential wave 3 to the upside. And if we then go to my preferred scenario over here, then this move towards the upside is part of a wave A or a wave 1, followed by a corrective structure and then a wave B or a wave 2 for then eventually a C or 3 to the upside. Now, as you can also see in this scenario, the 382 has not yet been hit. And that is interesting. And by the way, the 382 in this scenario is then, or the Fips in this scenario are taken from the low at 15.4k to the high of wave 1 or wave A. You can see price has not gone down far enough to hit the 382, and also the 382 and wave B are colored in purple, and the 2 and the 0.5 are colored in green, and there's a big reason for that. So if price moves to the downside, hits the 382 and then bounces, we know, as I just mentioned, that the 382 is a rare target for a wave 2. However, for a wave B, the 382 is a common target. So if price is bouncing on the 382, the probabilities for this move to the upside potentially being a wave C are increasing. However, if price is going to move further to the downside to the 0.5, then we can have both a wave C to the upside or a wave 3 to the upside. And how to know what the difference is? Well, a wave 3 tends to be more parabolic and also higher volume, increasing with price moving to the upside. And a wave C is a bit more lazy, bit more sideways, and the volume is often quite similar than wave A. So we have to wait and see how this is going to pan out. But as you can see in this scenario, I do expect another move to the downside. And that's also something I've been talking about in my daily updates and the medium time frame scenarios, where we are potentially looking for price to maybe take some highs and then move down once more, maybe even taking the triple top over here at 30k for then a move towards the downside, because we are now creating an impulsive structure, but this can still be a wave C. So not actually an impulse for eventually higher prices. It can potentially still be a wave C for then a continuation to the downside, where this target area is very interesting. You can also see I have a blue target box over here, which is sitting between 21.9k and 22.6k. The invalidation for this scenario is if price is going to continue pushing to the upside without hitting this area and reaches the high of 31k. I hope this video was valuable or helpful to you. Please check out the memberships and most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. Thanks for watching and subscribing, and I see you in the next one. Bye bye.